We had our biggest rate hike since 1998. Prices have fallen 5 months in a row below last year. Are we heading into a recession? That sounds like a nice headline, doesn't it? This is Sid Chandra from the Chandra Real Estate Group, and today I'll share with you different articles circulating in the media to show you the difference between reality and the news. I'm a big fan of keeping up with the news, but let's face it, only the headlines with massive, bold, negative statements get all the attention. Let's look at this article from CTV News, for example. When we look at this headline, we can see that prices have dropped 4 months in a row in June. Now, as we read along, the reality is it's the sales that have dropped, not the prices. The prices are actually up 5% since 2021. Now, I know what you're thinking. Many of you may say, well, we're in August now and prices are actually lower than June. Yes, that holds true for most properties, but there are some that are still selling for more than last year. It's the ones that are fully updated, bought at a great price, and presented in the best light possible. Here's another important factor to consider when evaluating your property. Majority homeowners have owned their properties for 3 to 5 years minimum, so they will likely still see profits if they sell their house today. Here's another article that breaks down the Ontario real estate market and the different price points. As we look at this graph here, we can see that the hottest area is Toronto, obviously, that's why it's marked in red. But as we branch out of Toronto into GTA, the prices start to become more affordable. Now, when we look at the Greater Toronto area as a whole, we can see that the month-over-month prices are down, but the year-over-year prices are all up in every category we see. We can also see here that the sales have dropped in every category month-over-month and year-over-year. This is a good indication of what happened in 2017. Sales had dropped, and then they drastically picked up in a couple of months or a year tops. And that's likely what's going to happen in the next few months as well. Sales have also dropped because many people are hesitant in selling their house with the current market conditions. There is a lot of certainty in the market at this point. However, I want to break this down further to give you perspective on what the numbers look like. I had a client reach out to me asking about what $1 million mortgage would cost in February at the peak market versus now in the down market. If we had bought a $1 million property in February for 2.5% interest with a 25-year amortization and with 20% down, our monthly payments would be roughly $3,500. Now, if we bought that same property for $850,000 with the decline prices at 5% interest fixed, which is what it is right now, 25 years amortization, and with 20% down, we would see a monthly payment of $3,900. There is a $400 difference in price. It's actually more to own a property that's less in purchase price because of the interest rate. So it's so important to look at your monthly payments than the purchase price, unless you're buying the property cash, of course. Now, I know some of you in the comments may be like, oh, but I'm putting a smaller down payment at this point. Yes, that's 100% true. I would calculate how much is going towards the principal versus the interest between the two scenarios. You may end up being in a very similar situation, buying at the peak market in February with low interest rates or buying at the low market now with high interest rates. Aside from the interest rates, do you know what the other biggest factor that may cause a recession is? Can I get a drum roll, please? It's inflation. Canada's inflation has peaked 7.1% in May. The June numbers aren't actually out yet, but they are likely a lot higher, and July would follow. Let's say I paid $1,000 for a bunch of items last year. This year, with the inflation at 10%, the same items will cost me $1,100. In order to understand what drives up inflation, we need to know what the biggest contributing factor is. Want to take a wild guess on what that factor is? It's shelter. Home expenses. 30% of our inflation comes from home expenses, that is mortgage interest and rents. With interest rates increasing, mortgage payments are increasing. With rents at an all-time high, inflation is also climbing up. Here's another article from Toronto Star that states the average rents in the GTA have gone up 20% since last year. To give it perspective, I'll share the average rents of the Toronto condos for 1 bedrooms and 2 bedrooms. 1 bedroom units are up 20.2% year over year. They cost roughly $22.69 a month. 2 bedroom units are up 15.3%. year over year, and they cost $2,979 every month. Interest rates are rising to tame inflation, but mortgage payments and rents are also going up, which is causing inflation to go higher, and that is a big problem. Inflation is not going to come down magically one day because rents and interest rates are rising. It's going to take a few months, if not years, for inflation to come down to a reasonable level. In this market, there are tons of opportunities for those that are willing to invest and be brave. Here's an interesting article that states that people that bought pre-construction with the rising interest rates will likely be forced to sell. Why pre-construction homes specifically? They're actually referring to flipping. For those of you that know me, know that I never advise buying pre-construction to flip properties. With the development charges, capital gains, and the market uncertainty, it puts us at too much risk. Investors bought these pre-construction properties with the intent to assign them before taking possession. With the rising interest rates, their property values dropped, and now they're not able to assign it at the property value they wanted. They also cannot take possession because the monthly expenses are through the roof. So what do they have to do next? Sell it at a loss. With all the data we have gathered so far, it's safe to say that property values may decline further later this year, but that may not be savings unless you're buying your property cash. We also know that rents are at an all-time high and soaring up even further, which also tells us that there are many people that would love to own a home but don't own one at this time. Back to our most important issue of supply and demand. When do you think prices will rise again? Is it this year, 2023, 24? Comment below. I'm curious to see what your thoughts are. If you like this type of content where we talk about trends and market conditions, please like and subscribe below so this video is shared with more awesome people like you. Remember, we provide results that move you.